Good evening. This is Ken Long from Tortoise Capital Management, evening of August 11th, 2009. I want to follow up on two trades that we framed and initiated last week and closed today to give you an example of how we trade the 5-day down pattern and the washout pattern on a swing basis. The first one is actually a 7-day down pattern in UNH, United Health Group. You can see from the frame that we first got interested here at the vertical blue line because we had 5 days down. And we framed the trade, but we didn't get the signal to fire because it just kept selling off. 6 days down, 7 days down. So we kept bracketing the entry and exit criteria. The profit targets at 28 and 29.5, which were retests of this little doji and a retest of the swing high, remain in place. And so as it kept selling off, actually the reward to risk kept working in our favor, so we're not in a hurry. We'll just take the entry when it occurs. You can see here 3 days ago we got the universal entry, which was a previous day red candle, then a white candle that opens up in the middle of the real body, and we get a nickel above the previous day's high. That's our mechanical entry. It closes well. The next day it's going up. Next day it goes up again, and those are both days in which, actually all 3 of those days in which the market was selling off. And so this was something that was reacting to reverse the overreaction of those 7 hard selling days. We can see that on a short-term basis, Williams percent R10, it was oversold and then has now come back to something like 10-day fair value. Well, at the end of 3 days of powerful selling in the face of a weak and weakening market, how much more did you really want? So near the exit, we took an orderly exit at 27.95, and this is what it looks like. So our entry on this 7-day down pattern was at 26.45. Initial stop of 25.95. We could have gone as low as 25.5, but with a 50-cent trailing stop on a powerful intraday move, 50 cents was 2% intraday. That seemed like a reasonable initial stop and gave us a decent position size. So our risk per share was 50 cents. Our initial target at 28 gives us a reward to risk of 3-to-1. Risking $250 or one bullet for us gives us 500 shares. With an exit at 27.95 3 days later, we net $1.50, and our dollar net is $750. The next one is PBI, Pitney Bowes, and this is a washout pattern. And again, the vertical blue line is the day that the washout pattern setup fired. So we see the big sell. This white candle gives us our setup day because it meets 3 criteria. The close was greater than the open, so it was a white candle. Today's low was lower than the previous day's low, so it slight improvement. And it closed above the previous day's high, which gives us the 3 criteria needed for the setup day. And you can see that it's oversold on an annual basis and oversold on a 10-day basis. So everybody that could be tempted to sell, in our belief, may have already sold. The next day it opens right at our mechanical entry and takes off, never looks back. And for the next 5 days we get growth, stabilizing a couple times, probably gets up to near value, hits our profit target around 22.50, and once again, after 5 days of recovery in a weakening market, how much more did I want? So we go ahead and take the orderly exit at 22.25 today, and this is the summary of this washout trade. Entry at 21, initial stop at 20.40. Gives us a risk per share of 0.6 or 60 cents with an initial target, an I target of 22.50 that gives us reward to risk ratio of 4-to-1. Risk per share $240, rounding it off so that we get 400 even shares. Exit at 22.25 gives us $1.25 net per share, or a net of $600 for 5 days in the trade. So that's a quick look at the washout trade. What's essential on this one is to disbelieve it all the way up. There's no reason for me to believe that the fair value is retesting the previous swing high. It has gotten to an area where I hoped that it would get to if everything worked out right, and it did. It's had 3 days in a row to try to break through. It hasn't been able to. That's all I need to know. Time to get out. So that's a quick look at a follow-up on the 7-day down pattern and the washout pattern. Thanks for your attention.